Hey there, it's Larry.Bammer with your weekly market update for November 14th. The government shutdown slowed things down for a bit. Major reports like inflation, employment, retail sales, GDP were all put on pause. But now that the government's reopened, agencies like the Bureau of Labor Statistics and Bureau of Economic Analysis are catching up and releasing new schedules. This timing really matters because only 26 days away, the Fed's final meeting of 2025 on December 9th and 10th is happening. The Fed is still walking that tightrope between trying to cool inflation without hurting jobs too much. Uh, Fed Jerome Powell said, I've said this in previous videos, there's no risk-free path, and the committee is split now more than ever. So a rate cut in December is not guaranteed. And here's the breakdown. To give you an idea of how fast things have changed. A few weeks ago on one of my videos, I shared that the Fed futures was forecasting a 93% chance of a cut in December. Then it dropped. Last week I talked about that it dropped down to about 64%. Well, I just checked. And today it's at 44% likelihood. So less than half now saying certainty with a Fed cut on December 10th. We also got new data from ADP, which monitors the color of the job picture. Their monthly report shows 42,000 new private sector jobs were added in October. But their new weekly data shows companies, some pretty popular companies, if you've been watching the news, are cutting jobs, about 11,250 per week over the past month. So this shows the jobs market is still growing, but very slow. On the housing side, there is some good news. The ICE's mortgage monitor shows that home prices rose 0.15% positive in October. That is the biggest monthly jump since March of this year. Annual appreciation also ticked up 0.9%, ending 9 months of slowing growth. Home values are predominantly still holding strong. Share this information with who you think needs to hear it. Follow me and give this a like.